Assalamu alaikum wa rahmatullah. We will be starting shortly, inshallah, in under 5 minutes, inshallah. Perhaps you may want to start, Sister Zahra. Brother Umar will join, inshallah. Sure. He's just joining.
Inshallah, tamam. Bismillah ar-Rahman ar-Rahim. والصلاة والسلام على نبينا محمد وعلى آله وصحبه أجمعين. Assalamu alaikum wa rahmatullahi wa barakatuh. It is indeed a great pleasure to welcome you to AAOIFI's public hearing on its exposure draft of the governance standard, Shari'ah compliance and fiduciary ratings of Sukuk and other Islamic finance instruments. We are holding this public hearing in collaboration with INSIF University, ISRA, RMC, KNKS, and Salihan. This is the first public hearing for this exposure draft, which was issued in December 2022. We will hold, inshallah, additional public hearings, more specifically 2 in English and 1 in Arabic in due course. So you may check our website and social media platforms for updates and details. Let me now take you briefly through the agenda of the session. It's a 2-hour session. The first 10 minutes are allocated for the welcoming remarks. Then our brother, Umar Mustafa Ansari, will start the discussion of the exposure draft and will answer your questions. We will allocate, inshallah, the last 10 minutes of the session to the closing remarks. So we will conclude at 11:30 a.m. Bahrain time. For my welcoming remarks, I will not take much of your time. I'll just talk about 2 points very briefly. The first point is related to the background of the preparation of this standard, and the second is about the approach for this session. AAOIFI in 2016 reconstituted its technical boards. So AAOIFI, or AAOIFI Accounting and Governance Board, was formed with the mandate of issuance of 3 standards, 3 three areas of standards, which are governance, ethics, and auditing. In the first meeting held for Egypt, which was conducted in March 2016, the board approved the list of projects for the term. And among the list of the project was a project related to Shari'ah compliance and fiduciary ratings. And the first outcome of this project was GS10. GS10 is Shari'ah compliance and fiduciary rating for Islamic financial institutions. And it was issued in December 2019. This ED, this exposure draft, Shari'ah compliance and fiduciary ratings of Sukuk and other Islamic finance instrument, is the second phase of the project. So it's the continuation of the project. The first project or the first standard focused on institutions, and this standard is focusing on instruments, more specifically Sukuk and other Islamic finance instruments, which will be defined in the scope of this standard. So this is it with regard to the background of the project. When it comes to the approach of this session, this standard is set out in 60 paragraphs. So alhamdulillah, it's not lengthy or very detailed standards. And inshallah, in the 2 hours, we will be able to discuss briefly all of its content. So even in case you didn't get the chance to read the standard before this session, you will get a good idea about its content and structure. Of course, the purpose of this public hearing is to get your feedback. So you may ask your questions in the Q&A tab and kindly avoid the chat box. After the 2-hour session, in case you still have some questions, you may send us in writing to governance@AAOIFI.com. This is it from my side. Now I would like to invite our brother, Professor Saeed Bouharawa, the Director of Research Affairs Department at ISRA RMC, to deliver his welcoming remarks.
Thank you, Sister Zahra. Bismillah ar-Rahman ar-Rahim. الحمد لله والصلاة والسلام على رسول الله سيدنا محمد وعلى آله وصحبه ومن والاه. السلام عليكم ورحمة الله وبركاته, and happy to be here with you, and it's always a great pleasure to partner with AAOIFI as on behalf of INCF and also on behalf of ISRA Management Center. Always the pleasure to partner with AAOIFI, and we have had a long partnership collaborations in standards settings, standards translations, and also other activities. And what I can say that the intensity of the work done by AAOIFI with regards to standards, especially with the governance standards, which are very crucial for the industry, are really great, and they represent the huge or high endeavor of AAOIFI to serve the industry in the best manner. So these standards or this public hearing on these standards is part of the many exposure drafts of AAOIFI, because when you go through the website of AAOIFI, you find that within the standards, the governance standards, AAOIFI, they have around 7 or 8 exposure drafts, which shows that they are very active in preparing and presenting the industry guiding principles with regards to governance. And the objective of this public hearing, as mentioned by Sister Zahra, is first of all to present to the participants, and most of them we believe that they are expert industry players, which are very important for AAOIFI enhancement of this Shari'ah compliance, Shari'ah governance standards. The objective is to, first of all, to highlight, explain the content of this brief, concise. I can say that this governance standard is a very concise one. As mentioned by Sister Zahra, it's just 16 paragraphs, and also it's straight to the points. However, of course, there is nothing perfect in terms of work. That's why it's called exposure draft. Therefore, we urge our respected public industry players, experts, especially in the area of rating or the area of Sukuk, to come back with their feedbacks, with their inputs with their inputs to enhance further this governance standards, and also to serve the industry, especially the Sukuk part, which represent a huge part of the industry instruments presented to the public. So this one is ensure compliance, especially ensure governance part of these Sukuk instruments. After the first phase, as mentioned by Sister Zahra, has addressed the financial institutions. This one is addressing the instruments, the Sukuk and Islamic financial instruments. So inshallah ta'ala, we are expecting our respected industry experts, players, especially in the area of Sukuk issuance, in the area of rating agency. We're expecting them to come back with their feedback with the international best practice, to present this one, to enhance this governance and to be presented in the best way. Therefore, we urge all our brothers and sisters in the industry to contribute with their feedbacks and their even critics, if they have some critics, or their proposed enhancements. Therefore, inshallah ta'ala, you are all most welcome to be part of this public hearing and also to be part of the enhancement of this governance standards. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Professor Saeed, for your welcoming remarks. Now I would like to invite our brother, Umar Mustafa Ansari, the Secretary General of AAOIFI, to start the presentation of the exposure draft. Brother Umar. Brother Umar, you may start the presentation. Can you hear me?
Assalamu alaikum.
Alaikum assalam wa rahmatullahi wa barakatuh.
My apologies for getting a bit late and getting stuck in some technical thing. And actually, there was a meeting before that. I was trying to run away, and somehow, at times things are beyond control. So for that, I apologize all of you for keeping you waiting. My apologies, and thank you very much to our partners, ISRA and IRA and others who have been supporting us in the initiative as a whole for the standard as well as for this public hearing event. So with that, without further taking your time, first I would like to brief you quickly about the project a little bit before I actually take you to the standard. So as I mentioned, I would like to thank again IRA, Islamic International Rating Agency, who have been working with us on this project for maybe several years now. The project had two parts. The first part was issued already by AAOIFI in form of governance standards on Sharia compliance and fiduciary rating for Islamic financial institutions. And this is the second part of the project where we are talking about Sharia compliance and fiduciary rating for Islamic finance instruments. And since the Sukuk are most important of the public instruments, we named the standard as Sharia compliance and fiduciary rating for Sukuk and other Islamic finance instruments. Now, with regard to the need, we have been discussing this thing earlier as well. With regard to the need of the standard or need of the rating in this area, it emanates from several factors. First factor, we believe that Islamic finance in its core is different from the conventional finance in several significant aspects. Number one, I would say, if it was not different, it would not be needed. That's simple. So for sure, anybody who feels that, okay, Islamic finance and conventional are the same, no difference, you just get the things round the other way around, or you get hold of the ear other way around, things like that. I believe while some of the similarities are there, and there are people who believe in those similarities, but at the same time, we need to understand the fundamental that Islamic finance is there because it is different. And if it was not different, it should not have been there at all. So now what is the difference? Obviously, there is a long list of differences. We do not want to go through a laundry list of those differences today. But from the perspective of the instruments right now, or institution and instrument both, let's quickly take a look at it. So the point is that most of the Islamic finance transactions are not similar to conventional in a way whereby in conventional the principal and interest are guaranteed by the creditworthiness of the counterparty. Conventional banking, if you go to the definition of conventional banking, it's all about having an intermediary that takes money on interest and lends money on interest and earns out of the spread between the two interest rates. But when we come to Islamic finance and Islamic financial institutions, it's not exactly the same in the way, because you cannot have interest. Interest is impermissible, not allowed by Sharia. Now we are stuck here where we have a contract which is interest-based contract, in which principal and interest are guaranteed to be paid. And what guarantee do we have is mainly the creditworthiness. Again, there can be securities and others in different type of contracts, but when we talk about normal bank, it is mainly the creditworthiness of the bank itself. When we come to Islamic financial institution and we deposit money in Islamic financial institution on a remunerative account, a profit and loss sharing account, or any other form, I am taking risk on the underlying assets of the transaction. Either it's a transaction by itself, or it's a pool of assets from which some returns are being generated, which are passed on to me. So from that perspective, my risk with this counterparty, Islamic financial institution, is not alone the creditworthiness. Yes, I know that creditworthiness is important and will always remain important in the transactions between the parties. But it is beyond that. For example, the counterparty is creditworthy, but the amounts that were invested were actually lost. What happens without his negligence? So if I invested in a venture and without a fault on the part of the Islamic financial institution with whom I was working, my money is lost because there was a genuine loss in the underlying assets, what happens? Who is responsible for that? Am I going to claim it from the Islamic financial institution? Do I have a legal enforceable right to claim that? That is not the situation. So it means that while credit rating has its own significance for all institutions, including Islamic financial institutions, but in respect of Islamic financial institutions, only credit rating can never be sufficient. Same applies to a conventional bond versus Sukuk. A conventional bond is a certificate of borrowing by the issuer of the bond, with a guarantee that the amount of principal and interest will be paid on the due date. Simple like that. Now, the point is that how you secure it, obviously there can be some securities, obviously secured and unsecured concepts are still there, but generally speaking, the creditworthiness, irrespective of what underlying assets are there, what is the purpose of that asset, etc., they all remain there. Here we are stuck with a situation in form of Sukuk, where the creditworthiness is one of the factors and not the only factor. So if there is a genuine loss in the underlying assets of the instrument, what happens? So this is the first part where we have the concept of fiduciary responsibility, which is different from the responsibility directly as a credit guarantee. Now coming to the second aspect. Again, I come to a conventional financial institution. When I invest my money, I'm least bothered about how this money is used, and I'm least bothered about my core contract with the entity itself, because I'm not considering the Sharia aspects. But if I'm a Sharia conscious investor, if I'm a Sharia conscious stakeholder, if I'm a Sharia conscious account holder, in all these situations, I am concerned as to how my money is used in a Sharia compliant manner. So the first thing is whether my contract with the counterparty is halal. Number two, whether my monies are invested in halal avenues. Number three, the profits and losses are distributed and calculated and distributed in line with the Sharia and contractual requirements, which are as per Sharia. So considering all these factors together, we come to one situation where we have sort of how I would put it, that we have a situation where, for example, I invest my money in an instrument, and at the end of the year, I come to know it was all haram. Even if it was generating a return for me as a Sharia conscious investor, that money is not halal for me. So that money is lost for me. So from my perspective, the concept of Sharia compliance of the contract, the concept of Sharia compliance of the underlying assets, the concept of Sharia compliance of the profits and losses and the returns that are generated by the instrument are all important. These are the aspects which are not addressed, this fiduciary responsibility aspect and this Sharia compliance aspect. They are not addressed by the conventional financial institutions, or these are not addressed by the rating services that are provided primarily for credit rating. Again, there is no disagreement on the significance of credit rating itself in any business. So even for Islamic financial institutions, even for Sukuk, credit rating has its own significance, and it may be more when the Sukuk are structured in a way that, for example, there is a purchase undertaking, or if there is a guarantee or something. So these things might still need some sort of credit worthiness, which is to be attached to the instrument itself. And from that perspective, we don't disagree that a credit rating part is relevant. But what happens if all the credit worthiness was there, but the assets got a genuine loss? What happens is that if all the credit worthiness was there, but still the asset got a loss in form of how I would put it, that the asset got a loss. It did not generate a loss, but it created a loss for me because the returns generated were impermissible. So for me, it became a loss, or even if it is an institution, Islamic institution, then it had to put that income into charity, resulting in a loss situation to all stakeholders. So these aspects need to be covered. And that is the whole idea behind this project, on which International Islamic Rating Agency had taken initiative several years back. They started doing fiduciary rating, but later we started working together on this part, and we developed the first standard on the institutions, and now this exposure draft of the second standard on the instruments. Before I take you through the document itself, with the presentation. Again, the presentation is exactly as per the document. So I'll take you through the presentation and take you through the document. Before that, on this concept and on these issues, I would like to open floor for any comments and question and answer. Please put all the comments and question answers in the Q&A tab, not in the chat window. So as of now, I can't see any question answer coming in the QA tab. Additionally, we may allow some of the participants to speak also if the time permits. So if anybody want to speak, you may also raise your hands. In due course, we will inshallah be allowing you to share your views by opening your mics. As of now, I can't find any comments in the or any questions in the Q&A tab. Is there anybody who want to speak Have we any raised hands? No, I think that even we don't have any raised hands. So either the topic is very difficult, or maybe people did not have time to read it before coming. Honestly, I don't know. Or at times I say on a lighter note that I'm too good, that you don't have any questions. Okay, now we have one hand raised, so we allow the comment to, I think it is Sister Zalika Milzan. Okay, please go ahead. Sister Zalika Milzan, can you hear me? I think you are allowed to speak. Please go ahead.
Perhaps it was by mistake, or it's having an audio issue.
Okay. So now I request everybody to put your questions in the question and answer tab. We'll try to answer them as soon as possible. And now, without further delay, I would take you through the presentation and take you through the important aspects. So, if allow me to share my screen, please. I believe I'm allowed.
Yes. Dr. Vijani, he's raised his hand.
Okay, please go ahead, sir.
Dr. Tijani?
Dr. Al-Tijani, sir, thank you very much for joining in. It's all highly, always we are highly encouraged to have senior people like you here. Your hand is raised, so if you want to speak, sir, you can go ahead, please. You are allowed to speak. You can switch on your mic and speak. Okay, the hand is removed, which means he does not have a comment right now. So let me take you through the presentation. I believe the presentation is visible to all of you. Okay. What is written in preface and in most of part of the introduction, I have given you a brief summary of that, and I would prefer to take you through the body text of the standard. But if you feel you have any comment, please feel free to put those comments in the QA tab. And in due course, time to time, we'll take a break to allow the mics as well. But for now, if you have any comment, please put them in QA tab. Now, objectives of the standard. The objectives of this standard are as follows: introduce and set out principle-based guidance on Sharia compliance and fiduciary ratings for Sukuk and other Islamic finance instruments. Strengthen stakeholders' confidence in the Islamic finance industry and the Islamic capital markets. And improve transparency and demonstrate the compliance of Sukuk and other Islamic finance instruments with the standards, regulations, and best practices related to Sharia principles and rules, Sharia governance, and adherence to values and fiduciary responsibilities. Sister Zahra, just if you can make a note for the consistency, there should not be a comma after regulations. I believe that it has to go through a final review again. There were some formatting and these reviews that need to be done before we finalize the standard. On the scope side, this standard applies to Sharia compliance and fiduciary rating engagements conducted by independent rating agencies to provide various stakeholders an independent comparable assessment-based rating or scoring on state of Sukuk and other Islamic financial instruments, Sharia compliance and adherence to fiduciary responsibilities by the originator and other organs of governance, including where applicable, the trustee and the service agent. So the standard originally applies, it provides the methodology, approach, and overall guidance to the rating agencies. So it's not for the institution, it is primarily for the rating agencies as to how and what aspects they need to consider for that purpose. For the purpose of this standard, the assessment shall be performed primarily at the Sukuks and other Islamic financial instruments level. However, considering the nature of the instrument and its assessment of the relevant function of the originator or service provider or trustee may also become necessary in line with the requirement of this standard. So, for example, if I am a company and I want to issue Sukuk, then for the purpose of certain governance aspects that are to be rated, not only the Sukuk's direct related functions, additional governance aspects of my entity as a company and my board of directors as a governing body might also be subject to some assessment. Obviously, it is to some extent a common practice that even when you do a bond rating, you have to see the rating of the institution itself first. So these sort of things actually are part of the methodology, but from that perspective, it's just a scope clarification that the scope, depending on the nature of the instrument, may include some aspects of the governance and other aspects which are beyond the original Sukuk structure. The instrument subject to this standard may include inter alia the following: Sukuk, including those issued by Islamic financial institutions, corporate entities, or governments. Explanation: instruments meeting the definition of Sukuk by whatever name called shall be considered as Sukuk for the purpose of the standard. Investment management instruments, including restricted investment accounts, which are not registered as separate legal entities. Unrestricted investment accounts, URIA or class of URIA or a similar instrument, which are offered as Sharia compliant instrument by an entity other than an IFI or by an IFI that is not rated in line with GS10 Sharia compliance and fiduciary rating for Islamic financial institution, or an IFI that is rated but considered as having less than targeted rating. So, for example, I have a rating of the B, but I want to have a AA instrument. So for that purpose, I can still have an instrument rated separately to attract investments in those in that instrument by ensuring additional governance, fiduciary, and Sharia compliance aspects. So maybe as an institution, I may have some controversial products, but it is possible that underlying that instrument, I don't keep any controversial product. I'm just putting an example. There can be different situations. So while it is applicable generally on the instruments for where the institution might not be rated, but it may include the situations where the institution is rated, but for the instrument, a better rating is needed. And particularly if an Islamic bank is issuing Sukuk as well, a Takaful company is issuing Sukuk as well, for example, tier 1 or tier 2 Sukuk to meet the regulatory capital requirements, etc. In those situations, you might need to have a rating of Sukuk higher than the rating of the instrument of the institution from all perspectives, including Sharia, fiduciary, and these perspectives. It also applies to another Islamic finance instrument or products offered publicly by IFIs or other institutions as liability, quasi-equity, or asset product. For example, a Sharia compliant housing finance product in a country where IFIs do not exist. So, for example, there is a mortgage house in, let's take an example, in any country of Europe where Islamic finance as a licensed entity, Islamic finance does not exist, but still those instruments may need a rating for having confidence of the common public, Muslim Sharia conscious public, or the possible stakeholders in that respective country. So in absence of a regulatory regime and everything, rating is probably the best solution that can be provided, in addition to obviously Sharia board and having the normal Sharia governance requirements to have confidence of the people. Responsibility. Although, as I mentioned, this standard is applicable on the rating agencies, but what we are saying here is that it is highly recommended that all Sukuk and other publicly offered Islamic finance instruments, excluding those offered by such IFIs which are rated in line with GS10, shall be subject to Sharia compliance and fiduciary rating in line with the requirements of this standard. So if you are an Islamic financial institution which is already subject to rating under GS10, you may not need a Sharia compliance and fiduciary rating for all your instruments. But if you are an institution other than IFI, even it can apply to the government sovereign Sukuk, it may apply to corporate entities having Sukuk, it may apply to a Islamic leasing company, it may apply to a technology company that may be offering some financial products. So in all these situations, we have suggested that these ratings should be obtained for all publicly offered Islamic finance instruments, including Sukuk and others. Such ratings should be preferably updated annually and announced publicly. This is what we are suggesting as a highly recommended requirement. So it's not going to be mandatory requirement, but it's going to be a highly recommended requirement for the Islamic finance industry globally. Coming to the definitions, I'm not going to repeat all the definitions except for the important ones. Islamic financial institutions is the standard definition that we have. It includes Islamic windows, just for clarification purpose. Instrument is as defined in paragraph 4. We'll see it in paragraph 4. Originator. First thing is, we do not use the term obligor. This is a very important point, that we do not use the term obligor in this standard or our governance standard on Sukuk. We use the term originator. We believe that obligor primarily is in the meaning of creditworthiness, while Islamic finance, all transactions are not creating an obligor situation. So even from AAOIFI's accounting standards perspective, we do not put most of these instruments as a liability. Most of these instruments may appear as an equity or quasi-equity instrument, although some of them may appear as a liability. So from that perspective, Sharia perspective, we believe of use of the term obligor is not correct. So we have used in our governance standard 12 on Sukuk and in this standard and certain other places, term originator for the issue. Again, we did not use the term issuer, although we thought the term issuer also, and probably in the first version of FAS 29, which is in exposure draft stage, it was mentioned as issuer. But then there were some discussions that in some of the situations, legally the issuer is the SPV, not the originator itself. So depending on a different structures, we identified that originator is the right term. Now, the definition says that for the purpose of the standards, an IFI or other institution, including a corporate entity or government, that originates or issues a Sukuk in line with Sharia principles and rules, directly or through the use of a special purpose vehicle or similar mechanism, and hence is the recipient or the beneficiary of the Sukuk assets, if applicable, or the proceeds thereof. There is a voice from Brother Altijani. You want to say something, or your mic is on somehow? Okay, thank you very much, sir. Rating agency for the purpose of this standard is a company or a firm that assigns Sharia compliance and fiduciary rating. See paragraph 8 and 9, because we believe that existing credit rating agencies may add capacity to perform this service, or there can be specialized firms or company or entities that can provide these services. So we keep both the options, that either you are a current rating company, rating entity, credit rating agency, and you can do this thing. And the second option is that you can do for the other part as well. So from the perspective of having an individual entity primarily focused on this one, but from them it will be important to have the credit rating expertise. I think I can see some questions coming in Q&A tab. Allow me to complete the this definitions part quickly. Rating scale is the range of potential outcomes from which one would be assigned to an instrument as the final summarized output in the form of an alphanumeric or other symbol, or less commonly as a numeric score. So you can have a AA system, AA, BB, AAA, A plus, A minus. You can have different approaches, or you can have a numeric score as well. So you can have a scoring system as well. And which would form part of a hierarchical representation reflecting the relative rank, relative against the benchmarks, relative rank of the instrument vis-a-vis the benchmark parameters under the scope of Sharia compliance and fiduciary ratings. This standard does not insist on following a single scoring or rating model. Rather, it focuses on defining the benchmark parameters and having a standardized rating system for each rating agency, and they need to make public information about that. Rating engagement is an engagement accepted by a rating agency to determine and express Sharia compliance and fiduciary rating in respect of an instrument. Sharia compliance and fiduciary rating is the rating engagement in line with the requirement of this para 11. Sharia principles and rules, these are standard as per AAOIFI based on criteria, on a hierarchy of 5 criteria items. Sharia standards of AOFI, regulations of the country Sharia regulator related to Sharia requirements, rulings of the Central Sharia Board, requirements of financial accounting standards of AOFI insofar as they include Sharia part, approvals and rulings given by respective Sharia supervisory board. So this is the hierarchy which is consistent in our different standards. Let me take, before moving to the next part, let me take the questions quickly. We have a comment from Tanzirul Islam. As per Basel III Tier 1, in order to qualify for Tier 1 capital investment must be perpetual nature, but there is no room for perpetual Sukuk instrument SPV for a specific time frame. I think from our perspective, we do not have a time bound as a condition. So we can have rating for perpetual Sukuk instrument. Brother Tanzirul, I think I answered your question correctly. If I have missed out an aspect. So if your question is about whether this will apply on perpetual Sukuk, yes, it will apply on perpetual Sukuk. We are not time bound on that. And obviously a perpetual Sukuk, if you see rather, I would say that if you see the table in which we have identified different type of instruments and their rating aspects and benchmark aspects, you will see that we have talked about the equity type Sukuk. So from that perspective, I believe that your answer is answered. But if you still have an aspect of your question that I did not answer correctly, please, you can put the question again with more clarification. Brother Altijani Ahmed, is there any relationship between endowment and fiduciary? Sir, in AOFI standards, when we talk about fiduciary, we are talking about the responsibilities like a combination of trusteeship and amana and the responsibility part. So endowment, when we have used endowment, we have used it in the context of waqf. So here we don't keep any relationship in these two words. Actually, the term trustee might have confused you because the term trustee is used in the context of endowment as well as in the context of fiduciary, both. But because some trusts are there which form an endowment, and there are the trust relationships for performing certain duties. So we are talking about the trust responsibility or trustee responsibility here and not about endowment. So it should not be mixed together. And I think it is happening because of the trustee, word trustee having two different meanings, one in the context of endowments and waqf, and second in the context of fiduciary responsibilities. We have comment from Sister Zalika Milzan. Assalamu alaikum. What the definition of SPV or special purpose vehicle for Sukuk, and how about influence by that to investors who want to buy back Sukuk at government instrument underlying assets? SPV and other issues are more discussed in detail by AOFI in the standard number 12, government standard number 12. So we have SPV related issues there. Some of the SPV related issues are being considered in our Sharia standard on Sukuk, which will be coming shortly. So from our perspective, these are the aspects that will be covered from the perspective of definition of SPV and other details about it. You can refer to our governance standard number 12. I do not want to go in that detail today because we have limited time and it's quite long standard. So I'll prefer to stick to the main topic today. The second part of your question, how about influence by that to investor who want to buy Sukuk at government instruments underlying assets? I'm very sorry, but unfortunately, I'm unable to understand the second part of the question very clearly. So may I request you to kindly explain your second part of the question again, please. My apologies for that. Brother Tanzir Islam has a comment. As per Basel III Tier 2, instrument to be issued by bank itself, but Sukuk to be issued by SPV. How then can we rectify or accommodate this gap? It's a very good comment, sir. We did not make it a condition. If I take you back, we said it can be through SPV or through a direct mechanism. So if you see, when we said that the definition of originator, we said that it can be done through SPV or similar mechanism. directly or through SPV or similar mechanism. So when we said it can be issued directly, so it means that if for the purpose of Basel III requirements, you need to keep an instrument direct, it can be done. I can tell you, based on my experience with the market, that some of the sukuk that are tier 1 and tier 2 are issued directly without use of SPV, and those are issued directly having a share in the overall investment pool, sharing the risk and rewards with the investment account holders or with the shareholders and investment account holders together. So you will find these structures in the market if you try to do some more research on this area. So the point is, yes, it is possible to issue sukuk. AOIFI does not make it mandatory that SPV have to be there. So from that perspective, I think your question is based on a misunderstanding that AOIFI is requiring all sukuk to be based on SPV. We do not require that. We are saying that sukuk can be direct or sukuk can be through SPV, and the issuer can be the entity or issuer can be the SPV. But the originator obviously is the entity. I believe now I have resolved your question, and how we can rectify or accommodate the gap. The answer is quick. As I mentioned, some of the samples you can see in different markets. You will find Mudarba based tier 2 sukuk or tier 1 sukuk, Mudarba or Musharka based, which share a risk and reward with the shareholders as well as the investment account holders. Imani Noor Astark Al Khan, how much time will be needed for rating agency engagement? I think this is not the purpose of this standard to define a time frame for that. So how much time would be needed and at what intervals it should be updated, etc. These are some of the things that are according to the mutual agreement. Some of the participants have said salam, wa alaikum assalam. Some of the attendees are having anonymous attendee as name. May I request them to kindly put their rename themselves in Zoom. It is allowed in Zoom. So one of the anonymous attendees has a question: is Sharia compliance and fiduciary rating of sukuk and other financial instruments important? If yes, why is it important and that we need to implement it? I think some answer to your question was provided by me in the beginning. But if you ask me in a nutshell, we believe that it is important to have confidence of investors in the instruments and to develop the Islamic sukuk and capital market, and to improve confidence of the investors on the Islamic finance market, including banking as well. So as a whole, we believe that Islamic finance market need to have more confidence of the investors and other stakeholders. And for that purpose, Sharia compliance and fiduciary rating has to play its role. Okay, so I think we just move to the next part now. Are there any hands raised, Brother Rizwan?
No.
Okay, so let's move to the next part. So the first part is about compliance requirement for rating agencies. So who can be a rating agency and what they need to do. A rating agency eligible to conduct a rating engagement under this standard shall be either a credit rating agency duly licensed or recognized to function as such by the respective regulators, having developed the capacity and the methodology in line with the requirements of this standard. So any rating agency is welcome, and we welcome and we request all the credit rating agencies that are working in the Islamic finance sphere to add this as a service line for them or as a product for them, as an additional confidence layer for the investors of Islamic finance instruments. Secondly, we allow a Sharia compliance and fiduciary rating agency, specific purpose agency, duly licensed or recognized to function as such by the respective regulators. Obviously, the regulators have to come up with this option of having such licenses or permissions, having developed the capacity and methodology in line with requirements of GS10 and of this standard, with due involvement of experts having suitable experience in credit rating and similar services. So from that perspective, we have one thing to mention, that this standard and GS10 are actually linked together in several ways, because the core concept is the same. The only thing is that one deals with institutions and this one deals with the instrument. So from that perspective, we have put a requirement that that the requirements of GS10, which are already there, are not duplicated here, and those requirements have to be followed. So for the purpose of licensing and for the purpose of quality assurance, some of the requirements are there already in GS10, which are not reproduced again in this one. Then we have, I think I have a question coming here. Okay, Walaikum Assalam. We have the eligibility criteria in this one. So the eligibility criteria includes ethical requirements, which are contained in this standard, quality control requirements, which are contained in standard number 10, requirements of paragraph 14 to 17 below in this standard with regard to acceptance of rating engagement, and fit and proper criteria in line with standard number 10. Obviously, it has to be developed by the regulator, but the overall criteria is available in standard number 10. Ethical requirements include AAOIFI's Code of Ethics for Islamic finance professionals and any other relevant codes of ethics that apply on the rating services. Now, coming to the next part, which is assessment scope and benchmark parameters. So what are the assessment scope and benchmark parameters? So I'll quickly take you through this one, and then I will prefer to show you the table. But in between, we have got two comments. Let me answer those comments. Okay, this is from Sineba Early Sylvia. Assalamu alaikum. I'm from Rajang, Lebanon. Welcome. Thank you very much for joining in. The next is from Megat M.H. Hassan. For paragraph 9 ABC, can you please briefly highlight the salient content reference to the Sharia compliance and fiduciary rating of Islamic financial institutions in respect of quality control requirements, sample fit and proper criteria, requirements of paragraph 14 to 17. Thank you very much. What I suggest, brother Sayyid and Sister Zahra, if you can just do a favor, that put in the chat box a link to the GS10. Link to the GS10. Kindly, if you can provide it right now. What happens that because because it's a quite long standard and so many aspects to be discussed, I do not want to go to standard myself and read out what are the requirements. Rather, we can make a reference to everybody, by providing provide a reference by actually providing a direct link to the standard. So if you can do it now, and I just request that instead of me repeating, if you can just have a quick look at it, a chat window will shortly provide a direct link to the standard, which is available at AAOIFI website, free to read. Okay, there is again a question from anonymous attendee. I think the same one. Assalamu alaikum. How will this standard be imposed on Fitch, Moody's, and S&P when rating Sukuk? Will they need to factor this standard into their rating methodology? Thanks. To be honest, it's an excellent question, and it's the most important question for me personally as well. So, if you ask me, do you want this service to be done by the global top rating agencies? My answer is yes. This is our first priority, and this is our request, and we have invited them to be part of this public hearing and the whole process of standard setting as well. Probably we'll be holding a public hearing event as well separately. We have discussed these issues in some of our conferences. So the first part, when we talk about Fitch, Moody's and S&P, they currently have primarily a credit rating mandate, and they do Sukuk assessment also based on primarily credit ratings. And for now, this is working in the market because, again, we know that there are a lot of similarities in Islamic and conventional finance. So this thing is working. But this is the first stage. When we move towards betterment of Islamic finance, this rating standard that we are talking about, or GS10 about the institutions, we believe that these should become more and more common. And from that perspective, these global top rate credit rating agencies and other country specific rating agencies, we believe and we hope and we invite them to consider offering Sharia compliance and fiduciary rating services as additional services. Again, some of them are going into green rating or responsibility rating or governance rating. So obviously, some of these products are there because there are some sustainability ratings. So there are some sort of demands in the market. So these rating agencies are coming into this business. So it may be a chicken and egg situation as well, that because today there might not be a demand existing for this part, so it may not be needed. Even credit rating took maybe more than 100 years to become mandatory in most parts of the world. Now, for most public instruments, for most financial institutions, in most parts of the world, a credit rating is a must. But it was not the situation maybe even up to 30, 20, 30, 40, 50 years back. When the rating services started long time back, they were normally demand driven, means that in order to enhance the confidence, institutions wanted to get them or their instruments rated so that they can attract more customers. But later, because the market stability was important for the regulators around the globe, so they started making credit rating a mandatory thing for the purpose of its financial institutions and for the purpose of publicly traded securities, particularly the debt securities. Even the financial institutions, after having these requirements from Basel II, Basel III, and the requirements of IFRS 9 and AAOIFI FAS 30, all these things are putting more and more emphasis towards having credit rating of the customers as well. So in the times to come, but obviously there has to be a starting point, and we believe GS10 and this exposure draft of GS is the starting point. And we are so happy to see that that in line with the fiduciary ratings, again, some of the ratings fully comply with the AAOIFI standard and some do not. But IIRA has conducted, to my knowledge, 40 plus, but maybe by now they might have got 50 plus ratings or maybe more than that. They might be like, as per my understanding. So they have started getting penetration into the field. And for sure, obviously, specialized entities might provide better services, particularly in the beginning, because for them it is a priority service, and for the large rating agencies, it might not be the primary service. But as AOP, we are trying to keep constant connection and working relationship with Fitch, Moody's, S&P, and other international rating agencies, as well as important country-specific rating agencies. We are trying to work with them in a manner to get maximum input for our standards and to take their feedback on our standards and to discuss the industry issues with them from time to time. And I believe that this is actually something that it is happening right now, but it needs to be enhanced further as well. So the question was very important. I think I have taken too much time on answering this one. It's still what I have said is not a concrete answer because things will shape up over a period of time. Right now, this is just an exposure draft. The Sharia compliance and fiduciary rating for institutions also has not become mandatory in most parts of the world. We have made it highly recommended. We believe that it may take some time to pick up, but this is something which eventually, in a more pure form of Islamic finance, in a more distinguished form of Islamic finance, will be more important than credit rating. That we believe. We have a comment from Dharmatintri. Is there any different for accounting treatment which Sukuk is purchased by individual, retail or corporates, and how is government role in Sukuk issued by them? AAOIFI has 3 accounting standards on Sukuk. 2 of them are final and 1 of them is in exposure draft stage. So we have our standard number 33 on investment in Sukuk and similar instruments. So this applies on the Islamic financial institutions who invest in Sukuk. We have a standard number 34, financial reporting for Sukuk holders, which is actually providing guidance of the minimum reporting requirements about the operations and financial matters of the institution of the Sukuk virtual entity about the interest. It will provide better insights about the overall requirements. With regard to the corporate retail by the issuer or originator, we issued exposure draft of Financial Accounting Standard 29 several years back. There were some issues going under discussion on the Shari'ah board of AAOIFI. So the Shari'ah board of AAOIFI has been going through the Shari'ah, the Sukuk Sharia standard, which is inshallah towards finalization, and we hope to issue the exposure draft shortly, and we plan to finalize it within this year if possible, inshallah. So with that, we have issued recently a revised standard or a revised exposure draft of FAS 29 standard. So that is still not final, but that provides guidance on accounting in the hand of the originator or the issuer. Okay, brother Dr. Abdurrahman As-Sinusi has a question. Is there interest in including Sukuk within the accounting standards and standardizing an information system for Sukuk accounting? Sir, thank you very much. I think I have already answered what you said, because I was answering the earlier question. So yes, as AAOIFI, we believe that Sukuk shall be subject to appropriate financial reporting at all the 3 ends, that is, as the investors, as the originators, and financial reporting need to be done for the holders of the instrument, the Sukuk holders. So I think I have answered your question already, sir. We have 3 standards, 2 final and 1 in exposure draft stage. And there are some disclosure requirements additionally in our governance standard on Sukuk. Rahmat Tawfiqur Rahman has a question. Excuse me, sir, in the ethical requirements, it is mentioned that rating agencies must comply with the requirements of relevant AAOIFI code of ethics. My question is, are there specific sanctions if an agency violates the AAOIFI code of ethics? The question is very good. As of now, no. So the question comes, if a rating agency accepts a rating engagement in line with the requirements of this standard or in line with the requirements of GS10, it is subject to AAOIFI code of ethics. So this is a contractual requirement to comply with this code of ethics. So to the extent of those contractual requirements, you will still be subject to those requirements. With regard to the other part that we have, which is like, you know, if they can there be a punishment on that part. That applies on the regulatory framework. If you see, we have talked about the licensing and permission regime for the rating agency. So the regulators have to either license them or give them permission in form of, we use the term recognized. So in their jurisdiction, they have to give them permission or license. So those regulatory regimes are the ones that can be subject to, putting any violation. The first part of the question that I answered has another aspect, because you know that because of being contractual requirement, because if you do a rating in line with the requirements of this standard, then contractually you have to comply with the AAOIFI Code of Ethics also. Then in that situation, even the court of law may consider the effects of such violation to be a contractual breach, and in that situation may decide what sort of decision, or again, I'm not saying about punishment, but what sort of sanction can be there on that. Thank you very much. It's a very good question, sir. We have a question from Brother Basiru Dayo. Would you make available GS Sharia compliance and fiduciary rating number 10? I believe it is made available by now. Just to check. Yes. Brother Syed Siddiq has provided a link to this standard number 10 in the chat window. So you can just click on that and you can have access to it. All AAOIFI standards are available at AAOIFI website, free to read. Normally, we do not allow download to keep sanctity of the copy intact. You know, we don't want too many versions going around, so we do not allow download. But it is always available, free to read at the website, and the link is already provided by Brother Syed Siddiq in the chat window. Brother Abdul Samad Abdullahi Abdi, differentiate debt type instrument and equity type in accounting treatments. A very good question, sir, but maybe we'll go out of discussion, ambit of discussion. But let me clarify very quickly, because it is going to impact the assessment or rating assessment as well. So from AAOIFI's accounting perspective, we believe that Sukuk can be a liability Sukuk. Sukuk can be a Sukuk can be a quasi-equity Sukuk, and Sukuk can be an equity Sukuk. We have provided this guidance in FAS 29 and some of the, which is exposure draft, and we have provided some guidance, a little bit guidance is available in FAS 1 on the general presentation of financial statements as well. Some of the framework aspects also cover that. So we have three classifications, not two. Not only debt type and equity type, we have debt type, we have which are a liability type. We don't use the term debt type, we have saying liability type, which include monetary liability type and non-monetary liability type. So for example, a Murabha Sukuk can be a liability type, monetary liability type instrument, and a Salam Sukuk can be a non-monetary liability type instrument. Then we have quasi-equity type instruments. The quasi-equity type instruments, for the purpose of assessment on rating, have been divided in two parts as well. I'll take you through that part later. And the equity type instruments, which include shares and which include any Sukuk or Musharka based other instruments, Musharka Mudarba based other instruments that meet the definition of equity. Obviously, the definition as per AAOIFI Financial Accounting Standard 1 and AAOIFI Governance Standard, Financial Accounting Standard number 29 exposure draft, that include the perpetual and the convertible instruments as equity as well. So we have some of the treatments are closer to IFRS, but IFRS do not have a quasi-equity element, and AAOIFI has a quasi-equity element, because we believe that quasi-equity actually reflects the true nature of most of our instruments like Mudarba, Musharka, some other instruments, etc. as well. Just to clarify quickly, some of the instruments from AAOIFI's perspective can be off-balance sheet instruments as well. So for example, if there is a Wakala Sukuk, unless the funds are commingled and some other definitions are not met with regard to perpetuity or conversion, the Wakala Sukuk may generally, according to AAOIFI standard, would be may generally be classified as off balance sheet. So it will not be coming on the balance sheet. Underlying assets will not be coming on the balance sheet. So again, I think it was good to discuss a little bit of accounting here, classification from accounting perspective, because this is something that is impacting the overall treatments on the other hand as well. In terms of assessment scope of a rating engagement, point 11A, how will rating agency determine the relative state of compliance with Sharia? Will they need a confirmation from AAOIFI on Sharia compliance on a specific sukuk, or will they rely on fatwas issued by the JLMs? It's a very good question. Please allow me to answer it later as to how that criteria will be applied, because there will be benchmark parameters and how they will be applied. But according to AAOIFI, that Sharia compliance means that you have to comply with the hierarchy of Sharia compliance. AAOIFI's hierarchy of Sharia compliance is, as I mentioned in the definition, the 5-step hierarchy, while different regulators may have a different level of hierarchy in their jurisdictions. We have a comment again from Megat H. Hassan. Are there any particular major issues feedback raised by existing main rating agencies in respect of the contents of the exposure draft? We welcome their comments and we are expecting their comments. Till now, we haven't received comments, but I can tell you that in case of GS10 and when we received their comments, and we invited them to provide their views in a working group meeting as well as in the conference as well. The general view is that rating agencies believe that the credit rating is the main concern of the investors. And from that perspective, they want to have the sukuk structures in a way that the net impact is like a liability, and obligation is actually being created on the obligor. We again, from the conventional perspective, we call it obligor. From here we count it originator. So from that perspective, yes, we presently have a challenge to convince rating agencies to come into this field, and their comment primarily is there. But let me mention another angle to this story. When you talk to some of the Sharia scholars and experts, on the other hand, with regard to the state of compliance of sukuk with Sharia, they say that normally the lawyers and rating agencies, and in some countries, the regulatory requirements are not meant originally for sukuk, which means that and again, when you talk to these lawyers and rating agencies and regulators, they say the mindset of the investor is like that. So considering the mindset of the regulator, the mindset of the investor, the mindset of the rating agency, the mindset of the lawyer, to some extent, some limitations on the ground from the legal framework, all of these things take us to a level where a sukuk mimics a conventional bond. And they are all happy, all these stakeholders are happy to keep it like this. From our perspective, we believe that keeping things like this is not in the greater interest of Islamic finance in the times to come. Because as of now, we rely mostly on a fatwa only. Okay, this sukuk has a fatwa. This is the starting point. This is not the place where we want to achieve. We want to have a proper governance structure for sukuk. We want to have sukuk reflecting the true essence of Islamic Sharia. We want the sukuk to be having more true nature of Islamic finance transactions underlying them. And from all these perspectives, the governance mechanism, the reporting mechanism, the accounting system, the regulatory requirements, and the rating, all these things need to be adapted in a way that truly reflects the true nature of sukuk. We are very clear, true sukuk are not debt instruments. According to Sharia, debt instruments are not allowed to be traded. The hybrid mimicking structures that we have today may not be meeting the top Sharia quality Sharia compliance requirements. And this is a hurdle. We need to understand that this is a hurdle towards further growth of Islamic finance. Islamic finance in a lot of countries, you will see that is reaching a level where a common man says, oh, what is the difference? Again, yes, I believe in Islamic finance and I believe there are differences. But how do you demonstrate those differences to the investors and stakeholders is important. And we believe that a rating in the true spirit of Islamic finance is one of the ways of establishing that confidence and to ensure better level of Sharia compliance. You all can recall in 2008, Sheikh Taqiyul Usmani issued a statement which was endorsed by AAOIFI Sharia board that most of the Sukuk, like he identified several significant issues in Sukuk in the market, and he mentioned that most of these Sukuk are not compliant. And unfortunately, I can share views of a lot of scholars right now that they believe that a lot of Sukuk in the market are not complying with AAOIFI Sharia standard and are not actually Sharia compliant in their views. Again, I do not want to go further in this argument, but we believe that for Islamic finance, this is the right way of going forward, to have better level of Sharia compliance and to have better confidence of the investors and other stakeholders by providing them better governance, better structures, better accounting, better reporting, and a more reflective true nature, reflective of true nature sort of rating. Thank you very much. I think I've taken a bit of time on that, but this is a very challenging issue. And again, we believe that this is a chicken and egg situation. For example, in some of the markets where Sharia audit is now on the ground, the big four firms and other audit firms were not geared for doing Sharia audits, and they were not offering Sharia audit as a service. But now, after the same becoming mandatory by the regulators, a lot of audit firms, including the big four audit firms, are performing Sharia audits. So again, it is they develop capacity and they hired additional resources and they developed some methodologies. So at AAOIFI's end, we will continue providing guidance, but from the market, we believe that as things become either mandatory from the regulatory perspective, or if these things come from the demand perspective and from the confidence of the stakeholder perspective, these things will be taken up by the larger global rating agencies as well. We thank them for their role that they have played till now, and we hope that they will be enhancing their role in this area as well. We have a question from brother Muhammad Jiddah Tom. Assalamu alaikum. What a hybrid instrument will be classified as liability type instrument? It's a very important question. I do not want to answer this one exactly here in detail, but in a nutshell, hybrid instrument which has significant return coming from the liability side, or maybe all return coming from the liability side, and having even the principal secured through the liability element within the hybrid instrument. I personally believe that based on the criteria provided in this standard, and particularly this aspect that I mentioned, which is there in the standard, I believe that instrument would be classified more like a liability type instrument. So the answer is not all hybrid instruments, but a hybrid instrument whereby the principal is significantly guaranteed and return is coming primarily from the liability side. That, for example, if it is a wakala plus tawarruk or mudarba plus tawarruk, and tawarruk transaction is the one that is actually like sort of guaranteeing the principal as well as return. In that situation, although there are, I'm not justifying all Sharia elements on that part, because I believe there are Sharia issues in that as well. But from that perspective, it will be a liability sukuk. Yes, I believe, yes, but not all hybrid instruments. If it is a hybrid sukuk having, for example, istasna and ijara, it may not be exactly a liability sukuk. I'm just giving you an example. If istasna is not the product that is actually taking over the maximum of the return, rather ijara is the one that is bringing the returns. So the different sort of instruments hybrid instruments may be there. That more common hybrid instrument which is there in some of the GCC markets is tawarruk and wakala, or tawarruk and mudarba, whereby tawarruk is the one that is providing maximum of the capital protection and probably 100% of the return coming from the instrument. So in that situation, I believe, yes, it will be classified as liability for this purpose. But other type of hybrid instruments may not be considered a liability instrument for that purpose. I believe my answer serves your question. Let's move to the next question. Will partial Sharia compliance affect the final rating? I think this question is related to your earlier question, so I'll take you to it later. Brother Hussein Hassan has a question. Please, Mr. Omar, can you provide us the specific fatwas for the Sukuk? Sukuk standard, Sharia standard number 17 as of now is in effect, which is a very basic standard. With regard to the products which are there are covered in different standards of AOFI, and there are some specific requirements regarding tradability, etc., in some other standards like financial market standard, Belden standard, etc., as well. So from those perspective, I cannot provide you all these answers at one place right now. Most of the answers that you want are will be coming in our upcoming Sharia standard on Sukuk, for which exposure draft will be issued shortly. So from that perspective, I keep this thing open, that we hope that you will be getting. Just for the benefit of the audience, I would like to mention that AOFI is an advanced stage of having a codified or taxonomy version of its standards, where you will be able to have a better search facility according to the topics, and you will have the original versions as well as the topic specific version of the standard. So I think you will be able to get better information in that one. Again, it will take a bit of time, but there is no harm in mentioning that inshallah we'll be coming up with that. Thank you very much, sir. Brother Tijani, thank you, Brother Ansari, for highly professional presentation. Thank you very much, sir, for your kind comment. How do the rating agencies deal in case of Sharia differences, for example, binding contract or not? Thank you very much, sir. This is a very good comment. Let me answer this question along with the earlier questions from our brothers, because these are related to the rating, how the rating will be done. So I'll address this question a bit later as I move ahead. We have question from Annalisa Atienza. Good day. I think the link to FGS10 is still not posted in the chat, but the exposure draft subject to the public hearing today. If AOFI can also share a link to download AOFI Code of Ethics for Islamic finance professionals. Brother Sayyed, I think it's in the. I think Brother Sayyed has provided links to both. I think he has provided link to the governance standard exposure draft as well as governance standard. And Brother Sayyed, if you can also kindly provide a link to the AOFI Code of Ethics for Islamic finance professionals. So I believe that I can see in the webinar chat window, not in the Q&A tab, but in the webinar chat window, I can see that Brother Sayyed Sadiq Ahmed has shared the. I think Brother Sayyed, you have shared to host and panelists. You need to share it with public.
Okay, brother, I will do that.
To everyone. Yeah, you need to share it with everyone. That's why I can see it and others can't see it, because we need to share this link with everyone, not only the hosts and panelists. Okay?
All right.
Thank you for bringing my attention to this. I think Brother Said will post it immediately now, and he will provide a link to the AOFI Code of Ethics for Islamic finance professionals as well. Thank you very much. Now we have comments from Sheikh Isa Sifka. Brother Salim, Assalamu alaikum for joining in. What should be the major focal point of Sukuk rating? Sharia compliance or ability of the asset backing the Sukuk certificate to generate income? Sir, and an excellent question, but there is no single answer to this excellent question. So this question answer, again, I'm not saying that standard is not providing the answer. Allow me to take a bit of time. I'll take you to how we actually do it. And from there, you can find how things can impact the rating and how they don't impact the rating. So I'll take you to that. We have a question from Ayan Umar. Please, can we have a shared copy of the presentation? The presentation is exactly the same as the exposure draft, which is shared. Exposure draft you can download, which is exactly the same text. So normally we do not share this version of the presentation because it is only the presentation version of exactly the same exposure draft. And exposure draft is available in PDF. I think Brother Sayyid has provided, Sister Tamara has provided link to that already. Maybe the question, Brother Salim, where can we share a recording of the Zoom session? Brother Rizwan, are you there? Brother Rizwan? I just want to, yes, Brother Rizwan, you remember we received this comment in earlier public hearings as well, and we discussed the possibility of posting all public hearing events on our website, on our YouTube channel. So I think this is time we received this thing again about the Zoom session recording. So I think we should start this thing going forward. Whatever recordings we have available, we should start putting it on the AAOIFI YouTube channel. So it should always be available going forward. I think we discussed this thing already. So if you can coordinate with Sister Zahra and Sister Farida and Brother Maj to make sure that going forward, all public hearing sessions recordings are available on AAOIFI's YouTube channel or LinkedIn page as you like. Thank you very much, sir, for that. And we actually received this comment earlier as well, and we'll try to make sure that this happens in future, inshallah. We'll try to see whatever earlier recordings are available. Obviously, we cannot keep them long, but we'll try to keep them going forward on our YouTube channel, inshallah. Okay, now just to mention that assessment scope. Okay, let me take you to the table that I'm talking about because the assessment scope, this is the text of the assessment scope. We are saying that what needs to be considered, but if we take you through that, so if you allow me. Okay, so now this is the summary of the assessment scope that we are talking about. Okay. I would say this table is the summary of the whole standard. So first, what we are saying, what type of instruments can be there? So, okay, first column is institution suggested weightage. So this is coming from GS10. So it is only for reference purpose. This is just to give an idea how the institution is weighted as per GS10. Now, then you say, then you see three types of instruments, quasi-equity, equity instrument, or quasi-equity without purchase undertaking or guarantee. And then you have quasi-equity with purchase undertaking or guarantee. And then you have liability. And then you have assets. Now the questions were about Sharia compliance. So first thing, as I mentioned, that compliance with Sharia principles and rules is the compliance with the hierarchy of the 5 items: AAOIFI Sharia standards, country Sharia regulations, central Sharia board rulings, AAOIFI financial accounting standards Sharia requirements, and Sharia supervisory board rulings of the respective institutions. So these 5 hierarchy items in the respective hierarchy establish the Sharia principles and rules. So any individual question as that was raised in, like, for example, having a binding promise or not having a binding promise, will have to be assessed or based on the parameters that are determined there. Okay. Sorry. So from that perspective, from the first aspect is Sharia compliance and governance. So first, in 1A, if you see the left column, 1A, Sharia compliance and governance, and compliance with Sharia principles and rules, and B, Sharia governance framework, originator, instrument, service provider, or trustee. C, corporate governance practices related to Sharia compliance and implementation. Then this applies to originator as well as service provider or trustee. D, transparency and disclosure. E, ethics and values, and that also applies to originator and service provider or trustee. That was all one, Sharia compliance and governance. 2 is fiduciary performance and capacity. Part 1, A is asset quality and returns, and B is credit worthiness of the originator. It seems too complex, but to summarize, there are 2 aspects: Sharia compliance, fiduciary performance. Sharia compliance includes, obviously, Sharia compliance cannot happen if you have good Sharia principles and rules, but those are not implemented, you cannot have Sharia compliance. So governance is a part of it. So first is compliance with Sharia principles and rules as to how your contracts, transactions comply with that. Obviously, you need to test it based on the governance model as well. So the Sharia governance framework requirements as per AAOIFI, as per IFSB, as per regulator, all these are to be considered. And from that perspective, you need to apply different approaches to different type of instruments. So if it is an equity instrument, or a quasi-equity instrument without purchase undertaking or guarantee, which means that it is very close to an equity instrument, in that situation, more or less the same criteria close to the criteria that applies to the institution shall apply. But obviously, we have additional elements. So, for example, Sharia compliance will have significant rating aspect between 30 to 35%. Sharia governance framework will have 10 to 15%, but that 10 to 15% will be divided between 3 parties: originator, instrument, and Sharia provider and trustee. Corporate governance practices will also be divided in 2 parts, that is originator and service provider or trustee. Then transparency and disclosure is there, which is we kept more or less similar to what was there in the instruments. We put ethics and values, which is significant, and then we added asset quality and returns. So the point is that these instruments are linked to underlying assets. So the performance of those underlying assets is significantly important. So you cannot just say, oh, we are compliant, we are good compliant, we have good governance. No, you also need to see what is the asset quality, what is the return on assets. So that is an assessment. And if you see, 2B is not applicable here, because this type of instrument has no element of credit worthiness. Because if assets are generating good return, if good governance is there, if Sharia compliance is there, that is enough. Because if the assets get into a genuine loss situation, credit worthiness doesn't count. Now, the second type of instrument is quasi-equity with purchase undertaking or guarantee. So if we have a Musharka Sukuk or a Mudarba Sukuk, but there is a 5-year limit to that. 5-year limit means that either after the end of the term, there might be a purchase undertaking or a guarantee about that value. Again, right now, I'm not addressing the Sharia issues. We know that from Sharia perspective, there can be purchase undertakings or guarantees according to certain requirements. So if we assume that those requirements are met, in that situation, because of the purchase undertaking or because of the guarantee element, an aspect of credit worthiness of the originator comes in. So if you see 2B, you will find 15 to 20% rating for that. Now, if I try to what the difference is between these 2 types of institutions. So for sure, Sharia compliance is more or less the same level. It is at least 1/3 of the overall assessment. But then Sharia governance and the corporate governance aspects get slightly less as compared to the institution, and the ethics and values and these things get slightly less as compared to the full institutions. And the aspects of asset quality as well as the aspect of credit worthiness, both are there. And again, these are the ranges suggested by AAOIFI. These are not hard and fast rules. Rating agency can determine how they assess them. Coming to the liability type instrument. If there is a liability type instrument, credit worthiness of the originator kicks in big time, and the asset quality doesn't count. So if in case of a hybrid instrument where technically most of the return is coming from the instrument itself, from the liability instrument or tawarruk, not by the not by the musharka, mudarba, or wakala or other participatory part. In that situation, the asset quality doesn't count. It's actually the credit worthiness that counts. But still, in that structure, you still need Sharia compliance. You still need to make sure that the structure is compliant. You still need to make sure that governance is there. You still need to make sure that the tangibility ratio is there, that the structure throughout the term is subject to to assessment from Sharia perspective, subject to monitoring, etc. So the governance part, Sharia governance part, corporate governance part, all these things might still have some relevance. But the more relevance in this case comes to the credit worthiness part and Sharia compliance. Governance, again, we are not ignoring, that has to be there. So, and again, the last column is about the asset products. Asset products don't need the asset quality and credit worthiness part. That is about mainly Sharia compliance and governance. So if you are offering an asset product like a housing finance product in a market where you are not otherwise rated, but you want only your asset product to be rated, or if there is a for example, there is a trading company or a manufacturing company that offers, for example, there is a motorcycle manufacturing company that also sells motorcycle on installments. If they want to have a rating for that product itself to attract more customers, or if you are in a non-Muslim country, you are offering a mortgage finance product or a car ijara product, something like this, which is not under a full licensed regime, you are not a full Islamic financial institution, but you still at least want to have that product rated. So this standard provides some option for rating of those products also. But we understand that asset type products will be less, and primarily it will be between equity type and quasi-equity, equity and quasi-equity without purchase and taking. So the perpetual Sukuk, etc., will be coming here. More common Sukuk will be going into quasi-equity, and the hybrid and other models based on Tawarruk will be coming mainly on the liability side type Sukuk. Salam Sukuk will also be coming on the liability type Sukuk. So this is the summary of how we have taken it. And now I think we again have some questions, and obviously the time is limited also. So let me take the questions and comments first. I think I answered some of the aspects for the questions that I initially kept open about whether we will be relying on fatwa only, or no, we will be relying on the whole hierarchy according to that country needs. And then how will be the Sharia compliance affecting the final rating? Now, there is a question whether the portion of partial Sharia non-compliance impact others. I think this is something that we have addressed, that a failure on Sharia side may result a failure on overall basis, or a failure on. So you need to assess each one of them separately, but it is also possible that you put the score of each item separately, or at least of item number 1 and item number 2 separately. So the Sharia compliance and governance may be rated separately, and fiduciary performance and capacity rated separately. Based on our discussions with the working group and our colleagues at IIRA, probably a scoring system is better in this one. But a failure in Sharia can be a failure of the whole rating, because there is no point in saying that Sharia is getting less than passing marks, but fiduciary compliance is good. No, sorry. For the purpose of an investor, it's a failure. So we have covered those situations in the standard. As the time is running out now, so I may not be taking you to each and every paragraph. I'll brief you about main contents of the standard, but not take you to the every paragraph in detail. But this is the crux of the standard that I have discussed here. So let me take some other questions and then take you through the standard itself. What should be the major focal point for Sukuk rating? Sharia compliance or ability of asset backing the Sukuk certificates to generate income? I think I partially answered your question, sir. It will be depending on the type of Sukuk, and it will be depending on the rating methodology of the rating institution. And while both of them are part of total scoring, but both of them individually need to be passed. So you need to pass every test for passing the whole exam. But you cannot say that I don't pass 2 of the tests, but on an overall basis, I pass the exam because I get the total marks. No, sorry, you pass some of the papers, which means that you did not pass the exam. This is the same approach like that. Brother Muhammad Habib Khuda, what are implications in this fiduciary rating standard if the Sukuk financial instrument is covered, guaranteed by separate Sharia compliant multilateral insurance takaful company, which is highly rated by S&P and Moody's, but not rated by any Sharia compliant fiduciary rating agency? Sir, an excellent question. So first part is about Sharia compliance. So the question is, in that situation, you may fail the Sharia compliance part because you are not covered here, but you may have you may be good on the item number 2, that is fiduciary performance and capacity, either credit worthiness or asset quality. So from our perspective, as AAOIFI's perspective, we believe that the full methodology application is necessary. Brother Salim has mentioned that can I enlarge it? To be honest, it's a big chart. Enlarging it is not possible. What I suggest that you download the standard from the link provided by our colleagues. The exposure draft of this standard is available in PDF format, so you can download and you can enlarge in the PDF version. So my apologies for that, sir. The chart is quite big, so it's difficult to show the whole chart in one go. Okay, sir, so let's move for the a brief about the other contents of the standard. So we were at, I think, paragraph 11-12. So assessment scope, I mentioned that these are the things which have to be there. State of compliance will be covered on the rating, which include compliance with Sharia principles and rules. All the things that I have mentioned in that table are included here. So I have summarized these sections already. For the classification of type of instruments, I have mentioned that part also. So I think I summarized most of it already. So if you see, I do not want to go through these definitions of what is equity and quasi-equity and others, but this is clarified here. Even we clarified the liability part as well, that what will be considered liability, and we have given examples of what will be quasi-equity with guarantee and what will be quasi-equity without guarantee, etc. So if you see, Sister Zahra, just make a note of it. Here we are writing without guarantee, and in the table we are saying without guarantee oblique purchase undertaking.
We need to make it consistent.
Some consistency needs to be ensured. Just you need to make a note of it that these paragraphs 11 to 17, the headings, etc., need to be aligned with the table. Either way, it needs to be corrected.
No problem. Noted.
Okay, so then these are some details about types of instruments and some clarifications as to how these will be seen. And the examples of these instruments are covered in these paragraphs here. In the liability type instrument, we have identified that these issues of tangibility ratio and all that. And I mentioned that if the ratio of liability component is more than 50%, including this, so the return from liability component is more than 66.7%, and total liability component is more than 50%, then it will be considered a liability sukuk for the purpose of this standard. So this is, I think, answering some of the questions that are there. There can be some liability sukuk which cannot be tradable, generally speaking. There can be some liability instruments becoming hybrid that can become tradable in line with the relevant Sharia requirements. We are not addressing Sharia issues here. We are just identifying the classifications, etc. Then on the asset type instruments, we have identified what type of asset instruments can be addressed here. Then we have the aspect of establishing benchmark parameters. So what we need to do, that we have identified the areas. So, and for each of the areas, this section identifies that how you determine the benchmark parameters. So for the Sharia principles and rules, you need to apply the hierarchy. For other aspects like Sharia governance, or for the corporate governance aspects related to Sharia, etc., we have provided what aspects are to be covered from coming from the existing AAOIFI standards or from the IFSB or other relevant standards, as well as the country Sharia guidelines, etc. So we have been referred to different sets of standards which apply in case of these issues like Sharia governance, corporate governance, etc. So these paragraphs are identifying the standards and the benchmarks that are actually to be used to determine the benchmark parameters. By applying those benchmarks, you have to make a checklist of benchmarks, and you need to assign your own significance to those benchmarks as to how they will play their role in the scoring or the rating system. Same applies to transparency and disclosure. Again, if you see, we have put these requirements like the application of the AAOIFI financial accounting standards, governance standards, financial accounting standard 34, and financial reporting for the Sukuk holders, IFSB standards. So we have created cross references to IFSB standards in this standard as well, because we believe in working together and in avoiding overlapping of work, and we are trying to work together with IFSB on developing doing some projects together as well. So from that perspective, we have created references, and we have avoided having our own standards in the areas where IFSB standards already exist. So that is the reason that we have created reference to IFSB standards as well, and in some situations, the country regulations also apply. There is one, again, on the fiduciary performance and capacity part, this is something where the rating agency has to apply their own professional judgment based on the principles that we have provided in these paragraphs. I know that the time is not sufficient, so I'm running a bit fast. But one thing I would request, mashallah, we had nearly 190 participants in the beginning. Still, I can see 160 plus participants. So the request is that all of you can kindly take some time out to have a look at this standard. There will be more sessions of public hearings. You can attend more and put your questions in those public hearings, or you can provide your feedback in writing to us as well. Particularly those who are actually actively involved in the rating services, either representative of the rating agencies or otherwise involved with rating services and the regulators. We would like to request you to provide your feedback in writing. It's a very important standard, and it can play a very important role in the improvement in the Islamic finance industry in the times to come. So from that perspective, it is good that we can have maximum input. For some of the participants who may question, for all AAOIFI standards now, we have a policy of holding multiple public hearings in English and at least one public hearing in Arabic. I'm talking about the technical standards. For Sharia standards, it goes the other way around. The public hearings mainly are in Arabic, but there will be more than one, inshallah, and there will be at least one English public hearing as well. So we are trying to have more and more involvement of the stakeholders in our due process of a standard setting, and from that perspective, we would like to invite written comments in addition to the comments that are provided today. It's a long standard. We know it takes time to read and to understand. We request you to take out a little bit of time in the greater benefit of the industry and provide us with your comments, which will help us. And obviously, you are invited to attend the upcoming public hearings also. For now, I have seen some question answers that are coming, but let me quickly provide the summary of the standard, then I'll take questions. So from the standards perspective, another important aspect is tiered and jurisdiction specific rating consideration. So for example, there is a country where AAOIFI Sharia standards are not adopted. From AAOIFI's perspective, we have put in hierarchy AAOIFI Sharia standards at the top requirement. So now what happens that there is a bank in that that has issued a Sukuk in that jurisdiction, and you want to rate that Sukuk. Now, that Sukuk is not complying with maybe one or two requirements of AAOIFI Sharia standard, but it is complying with the country Sharia regulations and the approvals of the Sharia board. So now there are two approaches. If you go for a AAOIFI-based rating engagement in line with this standard, this Sukuk may have a very low rating because it does not comply with some of the requirements of AAOIFI Sharia standard. But AAOIFI Sharia standards were not required in that country by default. So in that situation, we said that there can be possibilities where a jurisdiction has a regulatory regime whereby the hierarchy of Sharia principles and rules or other benchmarks that we have mentioned are not applicable. So in that situation, it is possible that that country, the rating agencies performing the Sharia compliance rating for that country may have a country-specific rating. which means that the country specific rating may be different from the overall rating which is there. They may not need to publish a overall rating. They can just publish a jurisdiction specific rating, but it needs to be clearly clarified that although the overall requirements of this standard are fulfilled as a rating exercise, but the criteria applied or the benchmark applied is based on the country regulations and not based on AOFI, which, for example, AOFI accounting standards are not adopted, so the requirements of AOFI accounting standards are not there. Maybe AOFI Shari'ah standards are not adopted, or if AOFI Shari'ah standards are adopted, but in the hierarchy, instead of giving number 1, they are given number 3. So I do not want to address all these possible changes, but I'm just saying that if the benchmark parameters for a country are different from the overall benchmark parameters that we have identified in this standard, we believe that still there can be a rating specific to that country or that jurisdiction. But in that situation, that rating should clearly identify that what were the benchmarks, and it should clearly identify that it's not a general AOFI based rating, although it may mention that it is in line with the requirements of this standard in general for the tiered and jurisdiction specific rating. So there can be a tiered rating engagement and there can be jurisdiction specific rating engagement. Relative weight of benchmark parameters can be decided by the rating agencies themselves. What we have suggested in this table is primarily a summary only. Obviously, there can be limitations on scope, etc., that can impact the rating exercise and impacts of result. We have provided some guidance on that part. We have suggested a rating scale that is just a suggested rating, and we mentioned that it can be a scoring system or a rating system. So there can be a scoring system or a rating system. Sister Zahra, I can't see this ratings in the left column in the presentation. So I'm not sure whether it's an issue with the presentation only or it's an issue in the main table in the exposure draft also. So just you need to check. Yeah, I think it should be there in the AA and AAA and all that. It should be there. So maybe it's a copy paste issue in this presentation only. But if it is there in the exposure draft, then still we need to resolve that issue. So with that, I do not want to go for detail for this standard further, but these are the suggested indicators, etc. for that. And here I would like to stop my presentation and I would like to take the questions and answers, because I think the time assigned for the presentation for the public hearing was till 11:30 Bahrain time. So we are ending the time and we have discussed most of the important aspects already. So very quickly, I'll take the questions from the question answer tab. We have first from Brother Badruddin Abdullah. Can you kindly give an example to illustrate what is meant by C corporate governance practices related to Sharia compliance and implementation in the liability column? Thank you very much. I think these are very good questions. Due to limitation of time, some of the aspects I did not cover, but let me answer them. First thing about corporate governance practices related to Sharia compliance. So the point is, we believe that Sharia compliance cannot happen alone by the Sharia board and the Sharia organs. Actually, the board of directors, the audit committee, and those charged with governance. The term "those charged with governance" is for the governing bodies, which actually are in charge of the institution. So these bodies actually have to be considerate of what is needed from Sharia compliance perspective. So, for example, AOFI governance standard number 4 and governance standard number 6 and governance standard number 12. They provide some requirements on the board of directors of the entity and the audit committee of the entity to have minimum level of involvement from the Sharia compliance aspects. So these corporate governance practices which are included there and the decision making process, we are coming up with a Sharia decision making process standard as well. Exposure draft for that is already issued. So we are coming. We believe that that the organs of governance, including board of directors, audit committee, other board committees, and others, still have some involvement in that part. So from that perspective, we believe that these aspects are to be assessed, and these should be assessed separately from the general Sharia governance aspects, because the general Sharia governance aspects are there with regard to these matters, but additional aspects related to the board and audit committee, etc., are very important, and it is actually the tone at the top that ensures Sharia compliance. And particularly with regard to the liability column, I think you're talking. Let me just see on the. Let me share it again. Okay, so on the liability column, can you see the screen? So. Okay, in the liability column, when we come to the corporate governance, I think the main aspects I think covered. There is no specific aspects to that. This may be this corporate governance aspect includes general aspect of Sharia compliance as well as certain corporate governance aspect on the liability side as well. Even for the liability sukuk, there is one thing important, that even for the liability sukuk, we do not believe that one-time fatwa is enough. So if one-time fatwa is not enough and you need to have a continuing governance requirements on the Sharia governance side, and so in a similar way, you need to have the involvement of the board of trustees, board of directors, etc. on that part as well. So I hope that this answer suffices your question. But I believe there are more discussion points in this aspect. We had long discussions in the working group. We had long discussions in the shorter working groups, and in the executive team, we had long discussions with our colleagues in IIRA. So from that perspective, it took some point to reach this position. Thank you very much for a very important comment, sir. Comment from Van Japit Ankla. Hi, sir. About the requirement of disclosure benchmark, is there no issue to benchmark are listed? There is no issue if the benchmarks are listed. How to apply if benchmark financial instrument is non-listed and related to data privacy laws? Please enlighten us. Thank you. A very good point, and a quick answer to that. AAOIFI recommends this standard to be applicable on publicly traded and publicly offered instruments. So which means that if it is a private instrument, we don't believe that you need to make all these things public. But with regard to the public instruments, all these things should be transparent. I believe it answers your question, but obviously there can be more details to that, and at times obviously we can understand that there are some limitations. I think the PowerPoint, I responded that PowerPoint is exactly the same as PDF, so normally we do not provide it. Assalamu alaikum. I would like to confirm that this rating contains the minimum requirement of rating agencies, right? The authority will have to upper hand in designing the rating system, right? Yes, I believe yes. Answer is yes. Quick answer is yes. Can we get a certificate from committee to attend this meeting? I think that for public hearing events, you can always get a certificate of attendance. You just need to write to us, and we provide a certificate of attendance if it is needed for your organization or if it is needed for CPD hours, etc. So you just need to write to our secretariat quickly, and we'll make sure that you get the certificate. Is there any specific event to downgrade rating or remove altogether? It's we have talked about subsequent event, etc., and update exercise, etc. as well. Obviously, there can be events, so we have addressed it as a core principle. Brother Sadiq, is there any standard for endowment sukuk? We have a standard on sukuk, and we have a standard on waqf governance. So you can refer to our waqf governance standard, but we do not have a specific standard on endowment sukuk. We believe that for endowment sukuk, you need to have a combination of both standards, the sukuk governance standard and the waqf governance standard. Is there any basis on the weightage? What does it refer to? It is a collective wisdom, and that's what we say, that we have come up with a collective wisdom of the experts in the working group and experts in the board with due input in that. And we would like to invite the participants here, and particularly those experts from the rating agencies, to provide some guidance as to how they see that these weightages are there and how they would prefer to change them. But one thing we clearly said, that these are only suggested weightages. Number two, we said that these weightages are in a range. So still we have left quite a room open. We believe generally Sharia compliance should not be less than 30%, and other areas are to be divided according to the suitability. I think with that, we don't have any other question into a QA tab. I think we need to move towards conclusion of the session. So Brother Rizwan, I think we need to invite our Brother Sultan to say a few words at this point.
Assalamualaikum, Brother Umar.
Walaikum assalam, Brother Sultan. Nice. It is always great to have you, and we are open to listen to your remarks.
So, Brother Umar, then representative from ISRA, also representative from INSIF, representative from Solihin, Shari'ah Advisory, and then distinguished guests, ladies and gentlemen. It is my great pleasure here to give the closing remark in this public hearing on the draft of AAOIFI governance standard, Shari'ah compliance, and fiduciary ratings of Sukuk and other Islamic finance instruments. As we know that Islamic financial institutions have recently extended their activities, including their activities in the Islamic capital market. And we know that Sukuk are one of the significant Islamic Shari'ah compliant financial instruments, which provide an alternative source of financing, especially for the giant corporation and also countries. Yeah, the increasing of use of Sukuk in raising the capital is proven to have a positive effect on the Islamic capital market. And Sukuk are now one of the most important tools of the Islamic capital market. They play a significant role in mobilizing resources. Islamic investors also prefer that the money is repaid, managed in compliance with Shari'ah, and generates an acceptable rate of return. In addition, it ensures also continued oversight and requisite transparency. The stakeholders, including investors, customers, suppliers, employees, regulators, and the society at large, have the right to know the extent of delivery against the promise of Shari'ah compliance. And according to the State of the Global Islamic Economy Report 2022, global Islamic financial assets are forecasted to reach 4.9 trillion by 2025. With the expansion of the Islamic financial sector, there have been considerable advancement in both the structures and methods for implementing Shari'ah compliant financing, including fiduciary ratings of Sukuk and other Islamic financial instruments. Today, public hearing have discussed, or we have discussed in this today public hearing, the draft of the standard that set out the principle to be applied by the rating agencies for Shari'ah compliance and fiduciary rating of Sukuk and other Islamic financial instruments. KNIKS appreciate the initiative undertaken by AAOIFI and other co-organizers in conducting this public hearing, because we believe it will strengthen the stakeholders' trust in the Islamic financial industry, particularly those who are in the Islamic capital market. The public hearing is an effort to improve the governance and transparency that introduce and set out principle-based guidance on Shari'ah compliance and fiduciary ratings of Sukuk and other Islamic financial instruments. Furthermore, the public hearing is also considered to be an effort to improve transparency and demonstrate the compliance of Sukuk and other Islamic financial instruments with the standards, regulation, and best practices related to Shari'ah principles and rules, Shari'ah governance, adherence to values, and fiduciary responsibilities. In closing my remark, I would like to thank AAOIFI and all other partners in SIF, ISRA, Research Management Center, and Solihin Shari'ah Advisory for collaborating with also to include KNKS to conduct this public hearing. We hope that in the future we will strengthen our cooperation, and I believe with active participation from the participants, this draft will be enriched and will be a good, inshallah, governance standard to come. I do hope all participants enjoy the discussion and gain useful knowledge and insight during this public hearing. Thank you very much for your kind attention. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Brother Sultan. Brother Rizwan, before I conclude, can you just let all the participants know The address for the email address for requesting certificate, etc. It should always be available. A colleague has mentioned it in the Q&A tab, but for his address he has mentioned. But we should always put it in the chat window, and we can provide to all participants the email address on which they need to request the participation certificates. So shall we conclude now? Sister Zahra, please.
Yes.
Please,
yes, I would like to thank all the partners and Isra, KNKS, and Salihan. A special thanks goes to ERA team, the Islamic International Rating Agency, for all the support they provided for the development of GS10 and this ED as well. Special thanks for the attendees who devoted 2 hours of their times to provide valuable comments, and we can assure you that all of your comments will be directed to the working group and Egypt to further deliberate them and incorporate them in the exposure draft. If you have additional comments, you can send it to us at AAOIFI, to governance@AAOIFI.com. And inshallah, we will hold 2 more public hearings in English and 1 in Arabic. So you may check our website and social media platforms in order to get the updates and details. This is it from my side. Fi amanillah, and thank you very much for your attendance.